This carrier update brought to you by Powerfleet. I'm here with Tony Mulvey. Tony, let's jump into it.
Yeah, let's jump into it. So we've got our outbound tender volume index, so our daily look at those tender volumes moving through the country. What we see, we've been on this downtrend. What we've seen over the past couple of days is a less severe downtrend, right? The last week we're down about 1%, but we're down about 18% from where we were a year ago. I mean, you have to remember rejection rates last year were about 26, 27%. Now they're down around 10. This tender volume index includes both those accepted and rejected tenders. So part of that decline is from a lower rejection rate. But ultimately, I mean, you look at that kind of flatlining where we are this week. I mean, you think about what it is. I mean, kind of a long weekend. I mean, think about the markets closed, Easter weekend, right? Typically, you see a little seasonal jump. I mean, look at last year at this same time. Coming into April, off the close of the first quarter, we saw a decline immediately before they propped back up volumes around Easter. Guess what? They're not coming up, but they're not going down as fast. So I think that's the big key. I mean, we haven't seen that Easter pop up, but it has more leveled off freight volumes here in the past week. We'll move on to our next chart. We'll pull up our outbound tender reject index. So talking about those rejections and what we see, this looks a lot more severe. I mean, it looks a lot more like a black diamond than it does a bunny slope. And we'll touch on that one a little later. It all makes sense. But I mean, look at where we're at. I mean, we're down about 1,500 basis points, which is a pretty significant drop. I mean, earlier this year, we were talking about where is this going to level off? Is it going to get down to 12, 13% and then start to level off? Well, we've kind of just blown right through 12%, and we are headed, I mean, quickly in towards single digits. I mean, last week we're down about 125 basis points in the past week, so we were right at that 12% mark. Now we're down under 11 with no real signs of slowing down, which I think is the most concerning part is this doesn't seem to have any stabilization at all.
Yeah, Tony, I mean, this is, an interesting perspective here because we look at where we were a year ago, 25% roughly being rejected, and that's a staggering number. When we look at that 10%, that's a staggering number compared to where we were before the pandemic. And so when we're looking at this number, it's almost like, I would say that right in between, but it's definitely going towards that pre-pandemic number quicker with that single digit really looming here. Do you see this potentially getting an upward movement depending on how these upcoming bids start to kind of expire, these bid contracts start to expire?
I don't think we'll see a lot of upward movement here in the rejections. I mean, you look at all the capacity front, like the amount of trucks that we've added to the market, new hire carriers. I mean, it was like a record number in February. Still haven't seen March's number, but I would expect it was probably up a little as well, if not, if flat. I mean, we've talked about it, flat necessarily isn't a bad thing in this environment. But I mean, look back in this green line, we have pre-pandemic levels. We were around 5%, right? We always talked about that 7 to 10% range was inflationary towards spot rates. Well, when you've been at 25%, that 10% is not inflationary, it's that deflationary pressure. We'll pull up a chart in our next carrier update that kind of shows this, that how spot rates and rejections kind of move together, especially because rejections are on a daily basis and we get spot rates every week. So it kind of gives you an idea of where we're headed. And when you think about this rapid decline, if we get into those single digits, it almost acts like a spiral effect. So when you think about shippers have the opportunity to move things contracted or spot. Well, spot and contract rates are for the past year, they've been really wide. That gap between spot and contract rates have been really wide. It's been incentive for carriers to reject freight, reject contracted freight, go into the spot market. Well, as new bids with contract rates are up to like $2.90, which is about a 20% increase from where they were a year ago. Well, spot rates are only up 3 cents per mile currently where they were a year ago. So I mean, that incentive has quickly gone away, and it's kind of like, now you start bidding each other down, right? So you get it on the upside, but you also feel the brunt on the downside because you want to keep the trucks moving. So it's just like it really is like a spiral effect.
Yeah, and I mean, when we're looking at this, is there any variances that we're seeing by mode here?
I mean, really, van and reefer are kind of acting in conjunction, both moving down. Flatbed had been the outlier. Really, even into like last week was our first real downside that we saw. But I mean, rejections on the flatbed market were up over 30%, which means still remarkably high. I mean, we were talking about rejections this time last year around 10, 12% in the flatbed market, and now they're at 30. So that's still remarkable. But on the van and reefer side, we've seen them both come down pretty significantly.
I mean, and this downward movement on the the reefer side is definitely interesting as we kind of, I keep mentioning here, we're getting closer and closer to that produce season. And once we get into the midst of that, I'm really curious to see how that market responds.
Yeah, for sure. I mean, it definitely typically it more affects spot rates than it does necessarily rejection rates. I mean, you'll see it because there won't be tendered out. It'll just move straight into the spot market. But ultimately, it does play an impact on rejection rates, and right now you haven't seen that impact show up, and we're halfway through April. So you would think that you would start seeing it, especially in Southern California, South Florida, those cross-border markets, and really it hasn't started to show up.
Awesome. Well, Tony, thank you so much for that update. We'll check with you again throughout the morning. We're going to toss it over to Kaylee Nix, who has John Kingston here with us.